Hi, it's Mark Coopersmith in my ongoing series of conversations with innovators and leaders in entrepreneurship, social entrepreneurship, and driving positive change. I'm really excited to spend some time today with Jean Rogers, or rather Dr. Jean Rogers, and I'll explain that in just a moment, of the Long-Term Stock Exchange. Jean, thanks for spending some time with us today.
Hi, Mark. It's a pleasure to be here. Thank you.
So just by way of a little bit of introduction, and Jean can feel free to add to it, Jean is the CRO, and it's not Chief Risk, it's not Chief Regulatory. We're going to talk about what the R stands for in a minute, of the Long-Term Stock Exchange, which is a new and emerging exchange that's just going to begin trading this week. Is that right, Jean?
That's right.
Yeah.
September 9th. Yes.
So we're right just a week from now. So we're right at the cutting edge right now on this. Jean has a PhD in environmental engineering. So when we talk about driving sustainability into financial markets, into environment, into everything else, you're already, I think, getting a reasonably good picture of who Jean is. Let me add one more item from her CV, from her background. Jean was the founder and led the Sustainability Accounting Standards Board, and we might have a chance to talk just a bit about that as well, for a decade or more. So it's this element of this integration of sustainability and financial markets, transparency, which I think really defines what Jean does so much, and why I'm excited to have her talk about some of the current initiatives that she's working on. Hopefully, I got that mostly right. How'd I do, Jean?
I think we're done.
Great. Okay.
No,
Fantastic.
I think you've said everything.
Perfect. So let me go back to one of the things that I kind of teased a little bit, that I mentioned up front, and that is your title of CRO, which is the Chief Resilience Officer, which is a different R than we're used to seeing attached to anything financial in that regard. Why the Chief Resilience Officer? Why that particular title?
That's a good place to start because the R in my title was actually very intentional. And I also want to mention that it was decided pre-COVID, and now the word resilience is everywhere. But 18 months ago, when I was first joined the Long-Term Stock Exchange and was really thinking about what is next in sustainability, what is next in ESG, how do we really continue to advance performance
When you
and
say ESG, what do you
positive
mean by that?
outcomes.
Yeah.
Oh, so sorry to use
No. I may use them too. So catch me on any acronyms. I will do the same.
Excellent. So the ESG is environmental, social, and governance, which has become the term used to sort of capture sustainable investing and sustainable companies. So as I was thinking about what is next, kind of as we try to continue to move companies towards better outcomes, I really hit on this word resilience as capturing the dynamism that is needed, and the idea that we actually don't need more disclosure. We need to actually build better companies at the core. And my own view, and having worked in the field for more than a decade, of standard setting and really thinking about what gets measured, and in theory that's also what gets managed. But my experience was that actually moving to performance, we needed to really go deeper into how companies were built, and resilience for me really seemed to capture that. So that's what I'm working on at LTSE.
Yeah, so we're in the middle of our COVID summer right now, and we're all trying to figure out how we can be individually and as organizations as resilient as possible. So before we move on, and I think that this is going to be a theme through our conversation, but when you think about that, whether it's financial resilience, whether it's personal resilience, are there 2 or 3 key insights or tips that you have for us, both as individuals and organizations, on this topic?
Absolutely. And I would say the first thing, and this sort of encapsulates everything that I'm doing right now, is that the first thing is that you have to really keep the long game. You have to realize that you're playing the long game and not become really caught up in the turmoil, whether it's personal, whether it's in the markets, whether it's systemic risk, whether it's COVID. You really have to keep that long game in mind, that long-term vision. And so as a company, that means just being very clear on what your North Star is, what your purpose is, and continuing to align your stakeholders around that long-term vision and continuing to invest toward that long-term vision. I think that's just really central to the idea of maintaining resilience.
So many of us know that's the right thing to do. We understand, okay, we've got our North
Yeah,
Star, we're aligned around it. The problem where we typically break down is executing every day, is when
yeah.
the emergency pops up. So how do we maintain that long-term vision and still execute effectively against that every day and not let the little urgencies get in the way of the long-term importance?
That's just exactly the challenge, isn't it? Whether it's in our personal lives and not, not letting the urgent take over and dominate what's actually important to do. And it's just exactly the same in business. And what I have seen as being really helpful in the companies that we work with at LTSE is to be very intentional about what the investment plan is, to really put in place the plans and the governance that really help to institutionalize that long-term vision so that urgent things do come up, but you don't lose sight of what that trajectory is, what that long-term trajectory is.
So for
Because
me, let me
institutionalized it.
pile on. I agree completely. For me, one of the key things, whether it's business leaders of global organizations that I work with or entrepreneurs, is um, we often get caught up in our KPIs, right? Our key performance indicators,
Yes.
um, which I think are helpful, but they can also sometimes help us lose sight of hitting those milestones. And for me, organizations and individuals, it's focusing on what do I need to accomplish this week, this month, this quarter, and make sure that even as things get in the way, I navigate those so I manage to hit my milestones. And as we look at it from a financial market standpoint, when we're signaling to our investors and other stakeholders what we're going to accomplish, they're going to look to whether we hit our milestones or not as to whether or not we're executing effectively, and they're going to penalize us or reward us appropriately. At least that's my take, and please feel free to pile on.
Well, that's exactly right. And you're alluding to actually what is a problem with the markets right now, which is actually short-termism and the types of metrics that are looked at quarterly, and particularly around earnings, can really begin to dominate the strategy. And when that starts happening, um, things fall by the wayside that are critical to achieving long-term success, like
Yeah.
investments in innovation, investments in human capital, and so forth, because they can be viewed as counterproductive when it comes to hitting quarterly targets. So KPIs certainly have their place, but what you are measuring and how you are putting those in the context of the long-term strategy is what's really important. And I also want to mention that there's now been, you hear conversations around stakeholder capitalism versus shareholder capitalism, as if it's just epic battle that is playing out. And I actually view stakeholders as critical to the long-term success of a business, to achieving those financial goals
Right.
as well as societal goals. If you are not aligned with your stakeholders, and if you don't have a big vision that helps stakeholders rally around you, and you're sort of going it alone, it is much, much harder to maintain the focus that you need over the long term. So really, really stakeholders help you to get to where you're going.
Yeah, and let me see if I might frame that just to make sure I'm following. And there's been a lot of research that's interesting on this. kind of in the olden days, not too long ago, there was this element that the organizations exist to create value, to create wealth for shareholders. It's really evolved in some organizations, whether it's Southwest from, in travel to plenty of others say, no, we have many stakeholders and we want to optimize the value across all of them. So whether it's employees, whether it's customers, whether it's shareholders, it's keeping your eye on those individuals and organizations that are essential to the successful operation. And it's truly an ecosystem. So, and I think where you're going on that too is it's not just optimizing for the shareholders, but if you do the right thing by all stakeholders, you may also optimize for your shareholders, for your owners. Is that right?
That's exactly what I'm saying. And we've actually been studying this at LTSE. And what's really interesting about the idea of purpose-driven companies or impact, oriented companies, that stakeholder-focused companies, it's that this idea of putting purpose at the core actually creates momentum around the company, because when the company succeeds, stakeholders also benefit. And so that creates a momentum because the stakeholders want to see the company succeed and will actually align and marshal forces,
right.
catalyze their energy in service of that company succeeding. And that is a really misunderstood benefit, or it's not well understood, that it's that momentum that's created when you align the interests that is actually a competitive advantage for
no, absolutely.
It's not just a nice thing to do, it's actually a go-to-market strategy.
Well, as the expression goes, it's hard to lead if nobody's willing to follow. So from the standpoint of employees and customers and partners, if they're not aligned around that long-term vision of the company, then it's really hard to perform effectively. But if everyone is aligned, if you have a common vocabulary, if you have common sets of milestones and outcomes that you're focusing on, then hopefully the financial results will also follow, in addition to meeting the needs of all of those stakeholders.
Yeah, I would reframe it as it's easier to lead if everyone wants to help you.
Yeah, I love that too.
Get
Exactly.
to where you're going, which
Yeah.
is like, and that's through that alignment. And it's not just alignment. It is actually, the bigger the vision, the more people, and the bigger, the more beneficial the outcomes, the more stakeholders will align, and want to help you succeed. So there's really something there to having a transformational, big vision, purpose-led company. Think Tesla, for example.
Right.
Example of vision at the core. You may or may not like the CEO's tactics, but many stakeholders want that company to succeed.
Right.
Because of the big vision and the societal benefits.
Yeah, perfect. I want to talk about the long-term stock exchange, but as a stepping stone to that, before you joined the long-term stock exchange to help really launch it, you founded and led the Sustainable Accounting Standards Board, SASB.
I did.
Now,
Yes.
What is that and why do we care?
SASB is an organization that sets standards for companies to describe their environmental and social impacts to investors. And so SASB is very focused on material, environmental and social issues. And by material, I mean, what issues can affect the financial performance of a company, which is why investors care about those issues. And they want to know, how well are you doing managing these risks? So
give us give us one or two kind of granular examples. Mm-hmm. Yeah.
So industry specific, and that is, I would say, SASB's big innovation, which was to really take this landscape of issues that are social and environmental in nature and break them down industry by industry. So, for banks, for example, it is, what are you financing in terms of, either clean energy or coal, or things that contribute to global warming. In healthcare, it's access to medicines, and it's data privacy, and it's whether or not you're spending more on marketing or R&D. And in manufacturing, it's resource efficiency, and it's closing loops and looking at the product lifecycle impacts.
So
So
how does that manifest
specific.
itself? I mean, is there a score? Are there a series of scores? I mean, how is it
Yeah.
that we then, as consumers of financial data and with
Mhm.
decisions to make on who to invest in, utilize information like that?
So SASB is actually an analog to FASB, which is the Financial Accounting Standards Board, which sets standards for all of that financial information that you consume, revenue, profit, earnings, and so forth. There's a FASB behind that that says this is how it should be calculated. That is exactly what SASB does, which says these are your environmental impacts, your greenhouse gas emissions, your safety data. This is how it should be calculated, so that it's standardized and comparable, and you as an investor are not getting completely different numbers of energy per square kilometer or per square foot, or you're easily able to compare performance. That is what a standard setter does. And
Yeah.
the SASB does not rate, does not rank. It just says, this is what is good to disclose. Here is the metric, and here's exactly how to calculate it so that everyone that needs that metric can rely on that information and easily consume it. Other people use that data. Other people, by people I mean ratings agencies, investors directly use the information. Others rate, rank, score, create indices, but they wouldn't be able to do that if they didn't have those underlying standards that SASB creates.
Yeah, which kind of brings us full circle, and I'm thinking about some of the social entrepreneurship programs and classes that I run,
Yeah,
where our teams, our entrepreneurs, talk about their visions, just as we're saying, and discuss what the impacts will be. But without these kinds of standards, it's very hard to actually measure and say, yes, we're delivering positive impacts in these specific areas based on a common set of criteria to measure those. So what I love about this is it actually lays that foundation to look at the multiple bottom lines that ventures may be looking for, especially those that are about to start listing on the long-term stock exchange.
that's right. Yeah,
So let's talk about
absolutely.
that. Let's talk
Great
about the long-term stock
segue.
exchange. Yeah, exactly.
Excellent. Yeah, it's super exciting. There is now an exchange on the national market system, SEC approved, fully operating, about to launch next week, open for business, which is designed for companies that have these long-term visions and are putting sustainability at the core of what they are doing. We are a stock exchange designed explicitly for these kinds of companies with transformational visions that are trying to create beneficial outcomes for their stakeholders. And
So
so, yeah, go
yeah, no,
ahead.
no, no. And then right back to you. But uh, a cynic might ask, we already have stock exchanges. We already have sustainability standards, right? Accounting standards.
Mhm.
Why do we need another exchange? What will that deliver in either financial value or in helping promote transformation and driving kind of your key term, resilience?
Absolutely. And we do have incumbent stock exchanges, and a company has choices when they want to list and access capital in the public markets. And we believe that companies need an option that is designed explicitly to tilt the playing field in favor of companies with a long-term view. So we are explicitly trying to alleviate the pressures of short-termism which exist, and which the other exchanges are not trying to do. In fact, their business models make money off of trading and volatility, which is a short-term condition. We are our business model is not designed that way, and we are explicitly designed with listing standards that promote long-termism and that institutionalize the governance in a company to allow it to operate against its long-term strategy.
Right.
So it's a different kind of exchange, really meant to tilt that playing field in favor of long-termism.
Now, with some exchanges, you have to choose where you list, right? You can't list on the
Yes,
NYSE and the NASDAQ. Do I
true.
only list on the LTSE, or can I dual list both on the LTSE and one of the major exchanges?
Right now, companies can dual list on one of the major exchanges and on LTSE. We have
I'm
the
sorry, I didn't mean to say the LTSE was not a major exchange. Not yet, right? Not yet.
not
We'll
yet,
get there,
not
right?
yet, but it's going to be big. And I mean, the demand is quite significant for a venue that recognizes companies that are building for the long term, building in this way with a stakeholder view. So I actually do believe, I know you were being tongue in cheek, but I actually believe that the demand for this exchange is there, and that we will begin to see listings, and certainly we'll begin with a volume of trading because we are in a national market system.
So,
So we trade anyway.
right.
We trade stocks that are listed on any exchange, whether they have IPO'd on our exchange or not. And after the 9th, we will be open to accept listings.
Right.
Do
So
listings at first, and then it will be a primary venue in the coming months.
So what do I get though? I understand that you're aligned with them. I understand that your
Yep.
vision is to help promote those businesses, but why would I go
Yeah.
through if I'm a company, why do I list on the exchange? What benefit do I get as a company to listing on the exchange? What benefit do I get as an investor? Because these shares are available elsewhere anyway.
So yes, so the benefit as a company that you get for listing on our exchange is that you know that you are in an exchange with a cohort of other companies and other investors that are all committed to your long-term success. And in order to list on our exchange, you will put in place the policies and the underlying plans that actually institutionalize long-termism and how you operate for the long term. We have 5 differentiated listing standards. We are the only exchange on the national market system that has governance standards above and beyond what you have to do to list on NYSE or NASDAQ. We have the same base listing standards in terms of commercial viability and
Right.
fiduciary duty. On top of that, we have 5 policies that a company puts in place to articulate its long-term strategy, to articulate how it creates value for its stakeholders and specifies what those stakeholders are and how they will measure those outcomes for stakeholders. A company must also put in place a policy for how they will align incentives in terms of compensation and having a long-term component of compensation, both for the board and for the executive team. The last one is, I'm forgetting the last one.
We'll come back to that. We'll come back to that.
Yeah.
So what,
But there's 5 policies that basically protect this ability to operate for the long-term view. Oh, I remember the last one. It is to have a long-term shareholder policy
right.
that is exactly how you will engage with your long-term investors.
Got it. So there's elements around transparency, vision, et cetera. For me,
Exactly.
as an investor, it's sometimes a challenge when I take a look at who I want to invest in. Some are easier just based on the products they have. Some are more challenging. You know, do I look at the supply chain? Where does it come from? Where are products manufactured? Those elements of ethics and how do you measure those is a challenge. So I try and make choices that I believe do 2 things, that I believe operate ethically and have that kind of long-term beneficial component for society, environment, education, whatever it is, but also are going to deliver good financial returns to me as well. What I like about the vision that you and your colleagues have shared, is as opposed to having to kind of go on a treasure hunt through the existing exchanges, the companies that are listed on the LTSE will already be pre-selected to have met many of those criteria that I might look for.
That's exactly
Then
right.
it kind of gets rid of that litmus test, that extra due diligence that I might do. You've done that for me. Then I can decide sectors, products, whatever else it is. So we're kind of holding things to a higher standard, if you will. As you talk about the
Absolutely.
standard setting, and within that, I can then look at the other elements like financial returns, what their strategy is, et cetera. Is that right?
That's precisely it. So we will have that community and that cohort of companies. It'll be easy to find them. As an investor, they'll be pre-screened in terms of the governance and the policies and the plans that are authentic. That will be actually reviewed annually by our exchange. And I want to
So you
also,
can get kicked off the exchange,
yes, you can get kicked off of the exchange.
right?
Absolutely.
If I do something bad, if I do
If
something
you
unethical, if I take advantage of my customers, whatever it is.
And even if you're just paying lip service to the policies and you don't actually have the underlying measurement and
Right.
plan, you can demonstrate that you are actually operating in this way.
So you're going to be using
You
SASB.
don't want lip service.
You're going to be
Yeah.
using SASB to help assess that.
Yeah, and
One
I
of the things,
wanted to just make one
yeah,
more comment, Mark, about the cohort, which is that we actually believe not only will these companies have better governance, but that they will outperform their peers over the long term because of the way that they are built, because they not only are putting this governance layer in place, but the underlying actions that make that commitment to long-termism real. And we talked a little bit about this. It actually creates competitive advantages if you
right.
put that long-term purpose at the core, if you're investing in human capital, and most importantly, if you're investing in innovation over the long term against your long-term strategy. Those are a set of competitive advantages that actually represent a new way of going to market that we believe, we will be studying this over the long term, and I believe many academics and investors will be studying it. But we think there's pretty strong evidence that these companies are going to outperform their peers
Right.
the long term because
Well,
of
as investors, we always look for what are those kind of critical elements that help one company outperform others in the same field. For example, one of the areas that there's been a reasonable amount of research around, I wish there were more, is that women-owned and in particular women-led businesses, um, even though there are fewer of them, typically outperform their general peers financially, as well as on the Great Place to Work institutes and measures. So for me, as I deploy my capital, an area that I look for is women-owned and women-led businesses, not explicitly to try and promote diversity, because while I think that's great, but also because not only am I going to do the right thing for society, but if I do this right, I'm actually going to get a better return on investment. So I win on two different levels.
That's exactly right. That's the theory. And that gets back to the original question about risk versus resilience.
Right.
I think that a lot of the ESG frameworks, the disclosure frameworks have
Right.
been focused on risk mitigation through transparency.
Right.
Tell us your issues. Resilience is really saying we're actually going to build better companies for the long term. So we're not going to have all those problems that we have to disclose because we're going to, at the core, build a company that is not going to operate in a way to create those risks.
Yeah. Right. Exactly. All right. So you're going to start trading in 1 week from today, is
Yep.
that right?
Yep. September
What are
9th.
we? We are the
Yes. It's very
second today.
exciting.
So on the 9th, so
Yeah.
we are countdown, right?
Yep.
Ground
To
control to
history being made.
LTSE, exactly. Um, so ignition's on. Now, I'm not sure if you're sharing companies that are going to be listing on your launch day. And if you are, I see you're giving me a nice head nod. If you are, why have you selected them?
So we cannot share companies that would be.
Oh, just with us. It's okay. No,
But yeah,
I'm kidding.
but what I can say is that we are working with a wonderful cohort of private companies that are all building great resilient companies for the long term. They're very mission aligned with LTSE. They all have wonderful commitment to diversity and inclusion. They're all working on their long-term policies, and it'll be a great cohort of companies when they, and the timing, of course, is dependent on their timing, not our timing.
Yeah.
So we'll be trading as of the 9th, a certain volume of the trades on the national market system, because we'll be fully connected in there. And then we'll be listing according to the timing of the companies and when they
Perfect.
go public.
Well, one of the underlying themes, as we kind of move towards closing up our conversation, one of the underlying themes that I really like, it's one of the areas I focus on in the social entrepreneurship programs that I run, is in order to drive long-term change, you need to be a sustainable organization in the element of you need to exist, you need to have revenues, you need to be financially sustainable.
100%.
Sometimes I get a little pushback on that by, no, making money is bad. And there are elements that I understand around that. But when we talk about sustainability, both financially and also the future of sustainability more broadly, give us, one or two final thoughts as we kind of put on our long-term vision following this discussion.
Absolutely. And I think, you've raised such an important point there about financial sustainability. Nothing great can be achieved without that. In terms of the progress that we all want to see in the world, this takes sustained long-term focus on social issues and environmental issues if we are going to move the needle on inequality or diversity or climate risk. It takes sustained long-term investment, and you must be a financially viable organization in order to make those long-term investments. So it's critical, it's table stakes to actually be a financially viable organization. You have to run a tight ship, and then, and only then, can you really commit the capital that's needed long-term towards the programs that create the change, create the beneficial outcomes for stakeholders and society. And I want to just, one final thought to really make that real. I've worked in this field for a long time now, working on measurement and metrics and standard setting. And I really think that where we need to go is to move from measuring where we are today and the impacts that we are having today and the performance that we have today on things, to understanding the trajectory that a company is on. And that's sometimes described as, in financial lingo, as moving from first order data to second order data. And by that I mean all of our frameworks for looking at sustainability, SASB included, look at metrics that are first order. They look at how are you performing on diversity? What are your diversity numbers? What are your carbon numbers? What are your greenhouse gas emissions? But in order to, and that gives us a great snapshot of right now how a company is doing. But to understand whether a company is going to succeed long-term, what trajectory they're on, we actually need to understand what are they investing in? What programs are they truly committed to? Not just what are the diversity numbers, what is the investment in human capital that the company is making? Not just what are the carbon numbers, what is the investment in carbon mitigation programs, carbon technologies, and so forth. So it's actually the second order data, the investment that a company is making, that is a more forward-looking measure.
Because those investments will deliver a return down the road. They're a current use of capital.
That's
as opposed
exactly
to
right.
a snapshot, you're taking a look at that return on investment downstream. Absolutely.
So that's where we're going. And you can't do that unless you're a financially viable company. You can't make those plans, you can't allocate the investment. So that is, I think, ties it together. Yes, you must be financially viable. And not only that, you must have a plan to allocate the capital against the things that really matter long term, not just a plan to report your performance today, but a plan to invest.
So the long-term stock exchange, and this is my take, so I might be wrong. There have been some evolution in corporate forms, as opposed to just C
Yes.
corps, for example. Now there are B corps, and B corps include in their bottom line non-financial measures, which means that governance from the board standpoint isn't just maximizing shareholder value from a financial standpoint, but that there's this almost like this balanced scorecard. If we go way back to an old management tool, that there's a
Yes.
scorecard that says we're getting multiple returns on not just investment, but for society. And the long-term stock exchange is pulling a lot of that visibility forward as well.
Yeah.
So uh, for me, what's a huge benefit of the LTSE is a platform to help promote companies that meet that minimum standard, that you provide that visibility around sustainability, around resilience, while also providing that curated group that can deliver a return on investment.
That's exactly right. And I think an important aspect of, it is the same corporate form, but actually the policies do require board oversight
Right.
of these policies and alignment with investors. So you create that through line of alignment with your board, your executive team, your investors, so that everyone is actually pulling towards the same long-term vision. And that's frankly where we see, when we see companies, implode over governance issues or misalignment, those can be pretty spectacular negative events when it happens from not getting governance right and not getting the alignment right. We've seen it, in WeWork and other companies
Right.
that just have not paid attention to how important governance is. And when you get that right, then you get the other things right as well. You get the environmental and social issues right when you really get that through line of alignment and you institutionalize it with governance. But we are not a new corporate form. It is the same corporate
Right.
form to access capital in the public markets. And the companies for which this is really an ideal listing venue are the ones that are truly committed to a long-term vision and delivering stakeholder benefits over the long term. Because then that additional governance layer is not actually extra work. It's protecting what they're building, and it is getting credit for what they're doing in the markets. And so it's not viewed as a burden. It's actually viewed as a protective measure and a go-to-market strategy.
And if everybody does this right and the market rewards that kind of good governance and good behavior, then the market cap of these companies will rise, and they will all be
That's exactly
rewarded,
right.
and investors will be rewarded as well for supporting those businesses.
And there's one more other benefit, Mark, which I think also goes, it is sometimes overlooked, which is that if the more and more companies that are built this way, we not only reduce the specific risks, those companies have a better risk return profile, but we reduce the systemic risk in a portfolio as an investor because they're contributing less to externalities.
Right.
That systemic risk is actually what has been affecting portfolio performance, certainly over the past 6 months. And so the more that we have a cohort of companies in the markets that are actually contributing positively to systematic change, the better it is long-term for your portfolio as an investor. So this will be the place to look for those companies that are not only better individually, but as a cohort are going to have more positive impacts on the systemic risk in your portfolio.
So we're talking about company level, we're talking about systemic, we're talking about a brand new
Great.
exchange. Uh, so for all of us and for all the companies that will be participating, good luck with your launch next week. We will be
Thank you so
following that.
much.
You can learn more about the long-term stock exchange, or LTSE, at Jean, URL?
www.ltse.com.
Perfect. And Jean,
Follow
especially
us
for my
on Twitter
social,
as well.
yeah, on Twitter, and for my my students and my executives and social entrepreneurship students, I'm sure that if there were a LinkedIn request or two that went to Gene Rogers at LTSE and
Please.
mentioned this relationship, I'm sure you're going to get a hearty endorsement and a reply back, yes. Gene,
Awesome.
Gene,
Thank you
thank
so
you.
much, Mark.
Yeah, thank you for spending some time with us.
Absolutely. Best wishes to you too. It's been a pleasure.